Watching Your Money. Joining me now, founder of Michael Lee Strategy, Michael Lee, head of Amerivet Securities, Gregory Farinello, and Walser Wealth Management President, Rebecca Walser. Michael, let's start with you. Earnings season in focus. More companies set to report this week. AMC Entertainment, Sysco, the food company, and Walt Disney, all on the list. Earnings have been strong this quarter. The Wall Street Journal reporting that the share of big U.S. companies beating profit expectations is on pace for a record. Mike, do you think earnings are keeping the markets higher right here?
Absolutely, Dagan. And what we have to put in perspective is that the history of Wall Street analysts' estimates for earnings going forward are always too bullish. So January rolls around, and as the year progresses, the number goes down. Well, this year, we were looking at January 1st for this quarter's earnings, we were looking at about 30%. By March 31st, they increased those estimates to 53%. By June 30th, they increased it to 63%, and we're tracking at 89% growth year over year. It's not so much the 89% growth year over year, it's the fact that just a few weeks ago we're coming in almost 30 points higher than estimates. So what does that mean for estimates for the rest of the year? And then while the stock market is up 18% this year, on a price to earnings basis, the stock market is actually 6% cheaper. So so many wildly bullish things are happening all at once. And if you think about it, there's nothing more bullish for an asset or a market than when it hits an absolute new high, because no single holder of that asset has a loss and is forced to sell. So unless the Fed gets really aggressive, I think we're going to see similar stories in the next 2 quarters of earnings, and the market can go much higher from here.
Washington, the politicians are making it tough for the Fed to get aggressive, that's for sure. They've been monetizing the debt with more than half of it since the pandemic began, and the spending, no stopping in sight. Rebecca, oil sliding 4% this morning on China COVID-19 concerns and a stronger U.S. dollar. Your reaction to that?
Yeah, Dagan, it's actually a mixed bag, just like you said. You know, you've got a strong earnings. He's absolutely right. Our earnings season is definitely beating expectations. Not too hard to expect, seeing as we were comparing it to Q2 of last year when we were shut down. But nevertheless, the unexpected surprises and beats are really high, and that's making the U.S. dollar stronger. Yet at the same time, we have this new Delta variant that unfortunately the media is really latching on to. I think it's a lot much ado about nothing. And when I say that, it's not because it's not a real thing. It's just because it's a lot less deadly. So the hospitalizations and the deadly results of Delta variant are what I think corporations, CEOs need to look at. Do we really need to consider another lockdown with such a low hospitalization and death rate? Because that is an extreme measure that we took, Dagan, that should be reserved for bubonic plagues and things of that nature, not a really bad influenza virus, which is what the Delta variant seems to be. So you have this mixed signal of the Delta variant raising questions about Q3 and Q4, and that's pushing things down and leading to more accommodative structures for the Fed. But you also have a great labor number coming out on Friday that's pushing the dollar stronger and making people think that the market is going to be fine. So it's two conflicting things, but right now the dollar is stronger because of last week's results, and thus oil and gold are both down. And we can expect that the OPEC production coming up last July would also have an impact on that as well.
Thank you, Greg. The U.S. added 943,000 jobs in July. The unemployment rate ticked down to 5.4%. Do you think the strong jobs report will push the Federal Reserve to taper sooner than expected? Again, the Jackson Hole meeting scheduled for later this month at the end of August. It always comes at a time when a lot of folks are on vacation, and the markets are particularly vulnerable to a little bit of information. So I just wonder if this is going to make for some wild trading at the end of August.
Good morning, Dagan. Good to see you again. Listen, the timeline, I don't think one particular number here changes the dynamic for the Fed. I mean, Friday's number was absolutely fantastic. It was great for the country. But I think if you listen to what the Fed is saying, I think they really want to see how the dynamics play out heading into the fall, right? So what does September look like for the Fed, which means October in terms of numbers looking back? So these numbers are great. They're a little backward looking. And I think we have a lot of variables right now. So we do have Jackson Hole. I think we will hear more about tapering. We have a September meeting. It could be in play, certainly. Our timeline, it draws out a little bit further into November for some sort of formal announcement with the Fed to begin tapering at the beginning of next year. But I would say this much. This is clearly a Fed that does not want to surprise the marketplace. So when the chairman comes out, and I think he's been very explicit in terms of how they're going to go about this process, it is going to be very methodical, very clear, and I think very well telegraphed.
But it would put the Democrat lawmakers in a bind who want to keep spending money, would it not? Again, the Wall Street Journal has an editorial about Joe Manchin. He was warning the Federal Reserve about inflation risk, but these lawmakers are part of the problem.
I did see that. I mean, certainly the political dynamics are pretty they're pretty intense right now, and even for the chairman himself, right? He's got, his job is going to be on the line, I think, at the beginning of next year. So it's a fine balancing act right now. But I would say that I think the Fed's focus, for me, we see the inflationary pressures. I think the Fed's focus is really more on the job market, and I think that's why you saw interest rates react the way they did on Friday.
Great to see all three of you, Greg Farinella, Rebecca Walser, and Michael Lee. Take care. Have a great week if we don't see you before then.